Okay, finally, we're at the equity open video, okay? I've put there in brackets, quit your job, because if you follow everything in this course, okay, until where we've got here, meaning LTP direction, ITP, all of that is in alignment, then STP, we're going to align it here with the equity open. If you do all of that, I really mean it. If you guys spent 3 to 6 months demo trading that, you would never have to work a day in your life again. You could just live off of these charts, okay? And that $60,000 that I made, okay, in 3 days, every single one of those trades was between 9 to 10:30 a.m., okay? This is the sweet spot. And if you were to just focus, okay, on this time window, you'd see a lot of success. The equity open questionnaire is within this video. You want to print this out, okay, and put this on your trading desk, okay? Because it's really important you check off everything that I put in this questionnaire. I'm giving you a checklist, and this is a personal checklist that I use. Okay, keep in mind all the previous lessons. Table of contents here. We're going to be looking at the 90-minute window, equity open as manipulation and how to trade that and when to anticipate that, equity open as distribution, how to anticipate that, when to trade that, and the questionnaire we're going to be using. Okay, so the equity open, we're going to be focusing on 9 to 10:30 a.m. All of our trades are going to be within this 90-minute window. If you were to let everything else go, use everything I've taught you in this course, and only focus on these 90 minutes, you can honestly quit your job. Okay, 9:30 a.m. will do one of two things. Okay, manipulation or distribution, right? It can also chop, and you guys should know how to anticipate that based off the previous session characteristic video. Most traders understand the logic of the 9:30 a.m. manipulation as a run on liquidity opposing to our draw on liquidity. But most traders don't know how to determine if 9:30 a.m. will be distribution. I'll present how to anticipate both. If you can catch both, you will have a plethora of trades within this 90-minute time window. All the previous lessons from core contents until this point are crucial because you must understand the bias and narrative. Okay, equity open manipulation. The equity open manipulation can be viewed with two scenarios. A reversal, okay, a stop hunt reversal, or a continuation purge. Here is an example of 9:30 a.m. as a reversal manipulation. So we're bullish, right? And then we see 9:30 a.m. as a reversal manipulation here. Okay, that's one of the two reversal profiles. The other reversal profile is equity open as a continuation purge. Notice we're bullish, right? And then we have a continuation purge in the direction of order flow. Remember how these continuation purges work with high probability. Discount low, premium high, range, okay, within the dealing range, low that's connected to the high, runs it out at 9:30 a.m. as a continuation purge in the direction of order flow. Here's the questionnaire, okay? This is what you want to print out and stick to your, stick on your trading desk, put it on the wall near your trading, whatever, okay? There's going to be two of these. This is for the manipulation. These are the questions we need to ask ourselves, and these are the questions we need to answer before taking a trade. The first question is, are we even going to trade in New York AM session, right? We determined that by profiling the market in Asia and London, which we covered in the previous lessons. Is 9:30 a.m. likely to be manipulation or distribution? If manipulation, then do we have a 15-minute or higher time frame, old high or low, that we can use to run stops in the opposing direction of our drawn liquidity? If yes, okay, if then scenario here. If yes, are we in premium for shorts or discount for longs? If yes, is there obvious liquidity to target relative equal highs and lows? Did we go above the opening price at midnight or the 8:30 a.m. above or below, depending on if you're bullish or bearish? If yes, is there SMT divergence? If yes, is there an entry model? If yes, execute with no fear, okay? 9:30 a.m. reversal. Here is the questionnaire. This is what you have on your trading desk. That's what I'm mimicking here by putting it here. This is what you'd have on your desk, right? So let's look at this first, and we're going to answer this question by question. Are we going to trade the New York AM session? First, we got to profile the market in Asia and London, right? So Asia, consolidation, London, slight expansion. Is it overly extended? No, right? So yes, we can trade the 9:30 a.m. equity open. Is 9:30 a.m. likely to be manipulation or distribution? First, how do we determine that? We need a higher time frame bias on the daily candle. We need an LTP direction for that very next daily candle, which requires the understanding of the previous lessons, right? Also, in this example, right, we're accumulating just before 9:30. So can price reverse from a consolidation? No, okay? So then it manipulates higher. Are we in a premium for shorts or discount for longs? We're obviously in a deep premium, right? There's that old high, by the way. Okay, we are in a deep premium, right? At the time of 8:30, if we were looking at it then without any of this price action available to us, we are in a deep premium. Okay, so yes, then we can move on. Is there obvious liquidity to target? Yes, we've got relative equal lows here. You see that there, failure swings. Then we have relative equal low here and here. And then we have a range with London's low to London's high. This low is obviously connected to this high. We accumulate the stops above it. We anticipate the market to pair orders with the stops below here, okay? So yes, we do have obvious liquidity. Did we go above the midnight open and or 8:30 a.m. opening price? We're above both opening prices at equity open, making it extremely high probability, okay? Is there an SMT divergence? Here is NASDAQ making a higher high. The Dow is making a lower high. So yes, there is SMT divergence, okay? Now, lastly and finally, we drop time frames, right? 5, 4, 3, 2, 1. Is there an entry model? Relative equal lows. Look at how easy and clean this looks. We then are within our sweet spot, 9 to 10:30 a.m., right? The 90-minute window that will help you quit your job right there. SMT again on this high. And then we form a displacement with a change in the state of delivery here, right? So these two up close candles, change in the state of delivery, short, okay? Everything in alignment for the market to be a manipulation and then to sell off to the relative equal lows, and that would be your entry. Okay, 9:30 a.m. as a continuation purge. Again, the questionnaire, same questionnaire. So we're going to look at this example. Okay, first thing, are we even going to trade the AM session? Yes, right? We have Asia accumulating, London trades lower into a discount. Is it overly extended? No, which means, yes, we can trade the AM session. Is 9:30 a.m. likely to be manipulation or distribution, right? We need the bias for that. And notice we're accumulating here, so we can't reverse from accumulation, so we need to be manipulation, okay? Do we have a 15-minute or high time frame, old high or low, we can run opposing to our drawn liquidity? Yes, we have this low, okay? So we can move on. Are we in a premium or discount? In this case, we're bullish, so we're in a discount for longs. So yes. Did we go above? Is there obvious liquidity to target? We have relative equal highs here. It's also a range high. Why? Because this high is obviously connected to this low, okay? And we'll see the relative equal highs here on a lower time frame more obviously, okay? Did we go above or below the midnight open and 8:30 a.m. open? We're bullish, so we need to see us go below the opening prices. Midnight open here, 8:30 a.m. open. We trade below both, making it extremely high probability for longs. We then trade below this low, and now we need to see, is there SMT divergence? This is the Dow again, lower low, NASDAQ, higher low. So yes, there is an SMT divergence. Okay, and then we're going to look at an entry model, right? Anything from the 5 down to the 1 minute, whatever you're comfortable with is valid at this point. Okay, we're going to be looking at a 1 minute here. And there you go. There is the relative equal highs, a lot more obvious on the 1 minute time frame, right? Really obviously engineered. Okay, then as we trade below that 15-minute low, everything is in place. That whole questionnaire, we have checked off everything. On top of that, we have an LTP and ITP in alignment. Do you see how we've stacked the probabilities so high? right? If you guys were to do everything I mentioned in this course and with the risk management I apply, you can really quit your job and really pass all of these futures prop firms and start stacking, right? So we then have that 15-minute low run out. 930 was manipulation. We then close above this bearish FVG right there. As soon as we close above, we can use the M1 IFVG. Why am I willing to use entries like this, right? This is because we have gone from LTP, ITP, and STP. The questionnaire is confirming the STP, right? Our probabilities are so in our favor that we can start catching these trades here, okay? Then we also get a change in the state of delivery, so we could be long here, okay? Then we get a change in the state of delivery with a close above the bodies of the collection of down close candles that run out the low right there. That could be a long, a bit high up, but and unicorn, right, with the breaker. I prefer the IFVG entry. Okay, equity open distribution. The equity open manipulation can be viewed with two scenarios, okay? Continuation after 8:30 a.m. manipulation. This is meant to say distribution, sorry. Continuation after 8:30 a.m. manipulation. So 8:30 a.m. is a manipulation, 9:30 a.m. is a distribution. A continuation after London session manipulation. So London session manipulates higher, right? And then we have a price swing formed with London's price action. And as we're approaching 9:30 a.m., we're trading back up into a premium, if we're bearish, from London's range high to low, okay? And we're bearish, okay? If we're around there at 9:30, we can expect it to just sell off. Okay, going back to this example. Now remember, this example, I keep bringing it back because we've hit a weekly rejection block, okay? Everything on the LTP is there for a daily bearish candle. We also broke this down on an ITP. So LTP, ITP is aligned for this trade. So we can look at it on the STP, right? For that equity open. Now we need everything on the STP also to align with that questionnaire. Now we've aligned all three time frames, and that's when it's very, very high probability, okay? So we have that 1 hour fair value gap here, if you remember from the previous sessions. Low, broken, high that broke the low, turtle soup, happens at 8:30 a.m. So 8:30 a.m. here was the manipulation, right? We're above the 8:30 a.m. opening price. We anticipate 9:30 a.m. to be straight distribution. And we can use the IFVG in there or a lower time frame in here. Okay, here is an example of the London manipulation to 9:30 a.m. direct distribution. Range high, range low. London manipulates the range high, then gives an expansion swing. Range low and relative equal lows are still present at the time of New York, so there's an obvious drawn liquidity. The market trades up higher into premium from this high to this low, and then equity open is straight distribution, right? And this is the questionnaire that you use for the distribution, right? Are we going to trade New York AM session? If yes, okay, is 9:30 a.m. likely to be manipulation or distribution? If distribution, then are we in a valid market profile for distribution? Notice it's a different questionnaire slightly. The first two questions are the same. Are we in a premium for shorts or discount for longs? If yes, have we run stops prior to 9:30 a.m.? If yes, is there obvious liquidity to target? If yes, did we go above the midnight open and or 8:30 a.m. opening price or below, depending on if you're bullish or bearish? If yes, is there SMT? If yes, is there an entry model? If yes, execute the distribution with zero fear. Okay, let's look at a continuation of 9:30 a.m. after 8:30 a.m. was the manipulation. Okay, so this is that same example, right? First, we profile the market. Are we even going to trade New York AM session? Consolidation in Asia, okay? Move down in London. Is it extremely overly extended? No. So we can trade the 9:30 a.m. Is 9:30 a.m. likely to be manipulation or distribution? In this case, it's likely to be distribution. Why? Because we have run stops prior. Also, it's a valid market profile. So the questionnaire, are we in a valid market profile for distribution? We're accumulating, right? 8:30 a.m. does the manipulation, right? Then we're in distribution. So if the market at 9:30 a.m. was accumulating, okay, at a point of reversal, we can't anticipate that. We need to be in a valid market profile, right? This is going all the way back to episode 1 of the entire course. Remember, I told you this is going to be the first thing we use in the equity open. I mentioned that in the first episode. So we need to be in a valid market profile for the market to be distribution. One of those is AMD. Remember the 2 market profiles, right? The sequences. Are we in a premium for shorts or discount for longs? Premium high, discount low? Yes, we are in a premium. Have we run stops prior to 9:30 a.m.? Yes, we have with 8:30 a.m. Is there obvious liquidity to target? High that's connected to the low, range low with, notice, relative equal lows. So the answer is yes. Did we go above the 8:30 and or 9:30 a.m. midnight opening price? There's the 8:30 a.m. open. We're above it at 9:30. Okay. Is there SMT divergence? Notice this high, lower high, higher high on yes prior to 9:30 a.m. Okay. Is there an entry model? On the 5-minute time frame, we do have an entry model here when we close below the bullish FVG here, confirming this as an IFVG. It shorts and distributes at 9:30 a.m. Okay, now let's look at this with 9:30 a.m.'s actual candle on a 1-minute chart. Okay. All of that framework in mind, we run out some stops prior to 9:30 here. Notice what does 9:30 do, right? We already closed below this IFVG here. 9:30 a.m. opens, trades higher, straight distribution, right? You can start catching these distributions now. Continuation after 8:30 a.m. manipulation, right? With London's range, okay? So here is London's range, right? This high to this low. Buy stops to sell stops, range high to low, relative equal lows as a drawn liquidity. Are we going to trade the New York AM session? Asia, and then London. It's not extremely overly extended, so yes. Is 9:30 a.m. likely to be manipulation or distribution? Okay, yes. Why? Because of this framework here. We're back in a premium also. From this low to this high, we're in a premium of the overall range we're working within. And we're also in a premium from this high to this low, right? So extremely deep in premium, right? There's that high. Okay, have we run stops prior to 9:30 a.m.? Obviously, yes, we did here. We run up the range high here in London. Is there obvious liquidity to target? Relative equal lows here, super obvious at 9:30. Okay. Did we go above the opening prices? Notice at 9:30 a.m. okay, we are above the 8:30 a.m. opening price here. Okay, extremely high probability. Is there SMT divergence? Lower high on the Nasdaq, higher high on the S&P. So yes. Is there an entry model? Well, from this high to this low, this is a premium fair value gap. Swing low broken here. This in itself is a solid entry here. We're very close to the midnight as well, and we're above the 8:30 a.m. open. High probability to short before the open, right, and catch the distribution of the open, right? So that is how this 90-minute window can set you free. This questionnaire is so crucial, right? You want to print this, guys, and have this on your desk, okay? Because you want to answer these questions before you take a trade. All of this, okay, is in alignment with the LTP and ITP as well. When you have all of this aligning, guys, the probabilities are so high, okay? And you can really quit your job by focusing on this 90-minute window and catching either the manipulation or distribution.